Bitcoin set for a major rally. Adam Livingston warns that bank reserves are in the danger zone. So I've Bitcoin's live chart open here, and you can see Bitcoin is trading at 114,913 at the moment. And the past 5 days, Bitcoin has been up over 6%, nearly 7%. The past month, Bitcoin has been up 5%. Past 6 months, it's been up 22%. And the past year, Bitcoin is up 69.56%. So Bitcoin has been doing very well the past year. So now I'll just take you into the article I have here. So Bitcoin could be set up for a big move, author Adam Livingston said. So in its October 2025 post, the newsletter focused on the number itself, not a price forecast for crypto. It highlighted that the cash banks keep in deposit at the Fed, often called reserve balances, has been sliding towards the low end of recent ranges. In simple terms, that balance is the banking system's checking account at the central bank. When it shrinks, dollar liquidity feels tighter and short-term funding can get more sensitive. The letter's point was that this reading matters for how the Federal Reserve thinks about its balance sheet and quantitative tightening. So Livingston he's a Bitcoin focused author and market commentator who writes about how liquidity cycles spill into crypto, and he's published 2 books as well, so he's very well up on everything. So he took the same reserve reading and built a thesis around it. In his view, cash levels are approaching what he calls a danger threshold, where scarcity starts to bite and policymakers pay closer attention to market functioning. Livingston ties that squeeze to 3 forces he says are hitting at once. First, he says the US Treasury has been rebuilding its cash balance at the Fed. When the government sells more bills to fill that account, private cash is absorbed and a portion shows up as fewer bank reserves. Second, he says the Fed is shrinking its portfolio through quantitative tightening, letting bonds mature without replacement, which also pulls cash out of the system. Thirdly, he says other Fed liabilities such as currency in circulation grow over time, taking up balance sheet space and leaving less room for bank cash unless policy adjusts. So in his view, when cash feels scarce and funding markets grow jumpy, officials tend to slow balance sheet runoff or otherwise lean against stress to keep overnight rates orderly. He argues those inflection points when liquidity stops tightening and starts easing have often lined up with stronger Bitcoin performance. Yeah, people have more faith in Bitcoin when there's trouble with the banks and their balance sheets and everything. He points to the 2019 repo market strain, the 2020 emergency policy easing, and the 2023 regional bank turmoil, which he says coincided with large Bitcoin advances. And he feels that the sequence of events at the moment the same thing could happen. Now, that's not guaranteed. Now, I do have to admit that article is pretty heavy reading and there's a lot to wrap your head around, but they're just his thoughts on Bitcoin and how it's tied to the bank's policy, and if the banks are having trouble with policy making decisions, etc., people have more faith in Bitcoin. That's what happened previously. It may or may not happen again. I hope I've explained it as best I can. It is a tricky one, I do admit. Thanks for watching. Take care. Bye bye.